This interview was created by 0y.io. If you'd like to support us, visit our website and stake with our validators and governance delegates. And enjoy the interview. Okay, welcome everyone to 0y Interviews. Again, it's our second episode, finally, after a few months pause. Don't blame it on me, blame it on the conferences. But we are finally back. So today we have Kedian from Level and CoolHorseGirl from Saltee as our co-host. We're going to be talking about Level.money, which is a project about restaking stablecoins. Well, at least that's how I'm seeing it, but Kedian will tell us more. So yeah, that's the quick intro. Kedian, please tell about yourself a bit more. What's your role in Level? How, like, about everything.
Yeah. Thanks for having me. I'm Kedian. I can provide a little bit of background about myself. So my background's in finance. So studied finance in college, and then did investment banking here in New York for a little bit of time, and then joined a fintech company called Brex in the Bay Area, which started as like a startup credit card business, and then kind of just generally entered into fintech, and then basically started in crypto around 3 years ago now. So that was when I linked up with my co-founder. We had a very different idea back then. Happy to kind of walk through that if you guys are interested. But basically made a few pivots like a lot of early stage projects do, and then most recently we're building Level. That's kind of like the quick intro, and happy to get into it.
Yeah, is it okay for you to say which exactly investment banking, like which company, or at least like
Oh yeah. I was
something
working
about
at
that one?
Lazard, so it's like a kind of a boutique M&A and restructuring firm.
Okay, interesting. Yeah, because
Yeah.
this story about like being in finance, especially if someone based or from New York, we have our friend who was like had the same story that she was in banking first and then went to crypto.
Right.
So it's kind of common, especially from New Yorkers. And then you mentioned that you had a couple pivots or a
Mhm.
couple ideas before actual current Level. What was that?
Yeah, so quite a few. So when we first started, I'm not sure if you guys were following like the play to earn kind of an Axie Infinity craze back in the last cycle
Yes,
in
Yeah,
I was
2020.
participating in it,
Oh,
not
nice.
only following.
of
Okay.
course you were.
I mean, you may have heard about us, although, basically, obviously, at that point, play to earn, given that it was a Ponzi, it was growing extremely quickly. And so you had all of these gaming guilds that were able to generate these super high returns, but they needed to basically buy the gaming assets and then have the players kind of operate them to earn the income. So what we were doing was basically building like an on-chain financing marketplace that was connecting passive investors who wanted the exposure to the really high yields at the time with the gaming guilds that were able to generate the yields but needed the capital to buy those assets. And so it's called Open Guild. At the time, we worked with a few guilds, basically that was the idea. Like I said, we started in late 2021, which was actually like just peak play to earn. And then very quickly in Q1, kind of the whole space, just as quickly as it kind of went up, it kind of came down very quickly as well. So that was the first kind of original thing that we were building, and that's what we originally raised on. Was kind of like forced to exit the space when the whole space basically died, at least in that form.
Is
Um,
it?
yeah.
Is there still like in your opinion? Is there still any future for play to earn, or just like the intersection of gaming and crypto? Because my own kind of a little bit of a background that how I
Yeah.
started in general was connected to Steam, like
Hmm.
back in 2016. So I always dreamed to have this like Steam market of items that is not completely owned by Game Newell, but rather is actually sort of owned by the players, that even if you get banned, your account is banned on Steam, then you can still sell off the items and then exit the market. But that never happened still. But I
Hmm.
I saw some experiments from Roblox, I guess,
Okay.
that they're starting to experiment with crypto a little bit. But the thing
Yeah.
is, I also see that gamers on Reddit are very opposed to crypto. They really hate it
Hmm.
if someone adds the crypto into the game. So, what's your
Right.
take on the play to earn and gaming going forward?
Yeah. Actually, I think the most realistic use case I think is actually what you just mentioned, which is like turning gaming items into like essentially NFTs and then having real ownership over those items as opposed to like ultimately it's just actually right now it's just the games having it. I think I actually do think play to earn probably played a role in the fact that people in gaming kind of hate the crypto aspect because it just turns it into this. Yeah, it was like almost just like unnecessary like kind of economy within the game.
Hmm.
And then there was like very extractive, right? And then like some people made money, but obviously I think like most cases in crypto, most people actually probably end up losing money.
Yeah.
So yeah, my view is there probably is some space for blockchain and like crypto in games, but it needs to be much more like almost like subtle or like in the back end, as opposed to kind of like play to earn, which I mean, my perspective was like at least that form of it was essentially just like some DeFi Ponzi that was wrapped in the game, as opposed to like a game that was supported by crypto and blockchain. But yeah, that was like you sort of have to go through these experiments, and yeah, I think it's unclear to me exactly what it will look like, and because we exited the space, we haven't been focused. I haven't been focusing too much on it, but I do still think that there is. Like gaming has huge potential to onboard a lot of people into like crypto, but then it's at the same time, like it's just that, you don't want it to be like too in your face with the gamers.
Got it. Yeah, and
Yeah,
then now.
it's
Oh, sorry. Yeah,
it's walking
you
a
go on.
fine no worries. It's walking a fine line when you think of how updated most people are with the space outside of crypto. It's not nearly anything like within crypto. So I think a lot of my regular gamer friends still think of play to earn when they think of gaming and crypto, even though what you just said the last time we heard of that was a couple years back. So yeah, it's interesting. How did that, like, the end of that road lead to the beginning of Level as you know it today?
Yeah, there's actually a couple of steps in between, so can go through that. So
Yeah.
when we stopped doing play to earn, we sort of kind of had this whole open space, right? But then we ended up spending a little bit more time exploring like gaming and NFTs to basically see if there was something that we can build in this space. But I think especially in a bear market, ultimately we just couldn't find something that had product market fit and that was like venture scalable, given that we were a funded project. And so this takes us to around March of 2023. This was when like SVB collapsed and USDC depegged, and there was kind of like obviously a lot of attention on stablecoins at the time, and so we just as part of that we just started exploring stablecoins a lot more deeply, built up a lot of conviction that this was like you know one of if not the only like major real product market fit use case of crypto at the time, and basically just decided to do like this really hard pivot from gaming and NFTs into like stablecoins. So complete 180. And yeah, that's kind of how we entered the stablecoin space. I guess at this point, nearly 2 years ago, which is crazy how quickly it's gone by. But yeah, but then we didn't actually start Level till more like late summer this year, or summer in the northern hemisphere. So like the year, almost year and a half we spent in stablecoins was basically exploring a few different stablecoin models. And so yes, basically, I guess those experiments didn't work out, but it did lead us to Level. And so the first version was pretty similar to what Agora USD is doing now, if you guys are familiar with them. Basically, the idea is like, they're a fiat-backed stablecoin, and then they use the treasury yields to incentivize distribution partners to basically get adoption for their stablecoin. And so that's kind of like almost identical business model. We were a bit more focused on like the DeFi kind of partnership side of things. I think what we found ultimately is that 5% yield in crypto is not very interesting. It's not a very strong incentive because people are looking for like, even on stablecoins, right? People are looking for like 20% plus. And then like, more generally, people are looking for like 10x's, 100x's. And so I think that's where that business model, at least for us, didn't take off. And then I think Agora is more focused on the institutional side of things, which we try to look into as well. One major advantage is Agora is run by Nick Van Eck, and so I think with kind of Van Eck backing and like that name, I think they have much more stronger relationships, and so that was probably something that we weren't able to tap into. But yeah, spent actually quite a lot of, I think it was like close to a year with that model, kind of built out the infrastructure to build a fiat-backed stablecoin. And then, yeah, like I said, for the reasons I mentioned, realized that it wasn't like, at least we were the right team to take this model to market. And I think actually very interested in kind of seeing where Nick takes Agora, because we still do think it's a very viable business model. But obviously, you need to find like the partners that are incentivized by that 5%, or like I guess now it's even lower, right, with the rates going down. So Then the next thing we did was we actually explored building kind of like an Athena competitor for a little bit. We had a different risk return mechanism, which actually is similar to what Resolve is doing now. And then we were sort of focused more on like other assets like Solana and kind of longer tail. And yeah, I think also like obviously we're not building that anymore, and the main reason was just because I think it was a lot of it was around scalability and sustainability of the model. So scalability was like kind of capped by the open interest in the market, and the sustainability is obviously we've seen like the funding rate yields go up and down even in the last year. And even Athena, I think we're seeing them sort of build out this treasury product, and so they're sort of I think at least my view is they're probably looking into diversifying the backing away from the funding trade, or like at least like basically having the option to move it away from the funding trade when it goes negative. So yeah, that's like the entire journey of previous things that we've worked on. I think over the summer, basically there's sort of like this new, almost like a technological kind of unlock where restaking protocols, restaking protocols that were like competitors to Eigenlayer. So this was like Symbiotic and Karak. They started building these restaking layers that were more generalized and allowed any asset to be restaked, not just like ETH assets. And so I think a lot of people actually still, very much think of restaking as like restaking ETH. But then back then, given that we were in the stablecoin space, where I think we kind of identified this opportunity with restaking stablecoins. And so that's kind of like the genesis of like Level in its current form. And we can definitely talk about that in a lot more detail.
Yeah, that was the next question, is actually like how exactly it works, because it's like when you go to the Level dashboard, you see a lot of different stable coins, well, mostly decentralized ones. But then what happens on the background when someone mints Level USD or restakes their current stablecoin, like for example Elixir's, I think it's SUSD or SDUSD, the staked version of their Elixir's stablecoin. So how exactly it works on the background?
Yeah. I think before I get into that, I think it'll be helpful if I kind of go over, if anything, like our vision's kind of evolved a little bit. Restaking is still an important part of it, but yeah, I think what I just described before was kind of how we got into like the current form of Level and like restaking stablecoins and all of that. I think what we realized, and this is actually more recent, is that at the end of the day, the idea that we're trying to do here is like basically produce a stablecoin Level USD that generates yield or is like backed by like DeFi yield more generally. Like if you consider restaking to be one source of like innovative DeFi yield, right? And so, and then related to that, aside from restaking, what we actually do is first put the backing assets into like lending protocols like Aave, and so from there, what we're doing, like once again, Aave is like a very DeFi native source of yield, and so we're essentially stacking these DeFi yields on top of each other to back and generate yield for Level USD itself. So that's kind of like, I think, the more generalized kind of description of what Level is now, as opposed to just being a stablecoin that's backed by restaked assets. And so, yeah, I think I sort of touched on how it works, but I can go into that in a bit more detail. And so also just to clarify, you mentioned a lot of these stable coins that we're partnered with. I can also go into that, but I'll start with our core product in its current form. And so, yeah, like I described, we have Level USD, which is a stable coin. Users can mint that using USDC or USDT only currently. So, you go to our front end, you come with USDC or USDT, and you essentially deposit that to mint Level USD. And so now it's like very simple, right? You just have a stable coin that's backed by Tether and Circle essentially. And then what we do is basically generate yield using these reserve assets, which is actually very similar to how any stablecoin operates, right? Even Circle and Tether, basically you give them USD and then they generate yield for themselves by putting it into treasuries. But what we do, we want to be decentralized and crypto native. And so we put the USDC, USDT into Aave. We earn the lending protocol yield there. And then this part we've started testing, but we actually haven't rolled out yet. And then there's like the restaking on top. So we take the A tokens from Aave, which you get when you lend on Aave, And then those are the assets that we actually restake into we will restake in the next few weeks into like EigenLayer or Symbiotic or Karak. And so, yeah, the idea here is that these are, dollar-denominated stable assets that are able to provide economic security for the AVSs, and in return generate like the restaking rewards and AVS yield on top of the lending protocol yield. And then we pass, the idea is that the protocol generates that as revenue, and then we pass that revenue, or at least a portion of that revenue, back to users in like a pretty standard kind of 46-26 staking mechanism. So that's the overview of how the product works in terms of like the core Level USD side of things. I'll pause there if you have any questions, and then I can go into like the other stable coins that we have kind of sitting in our vault right now.
Probably the question was, you've chosen Aave P3 for the base yield, right? What's the reason behind that, considering that some of the projects like Blast, Iowa, they're choosing like Sky Money, which is ex MakerDAO, for the base underlying yields, and whether you have like any plans to diversify from Aave to some others? I assume you probably have.
Yeah. Basically, the short answer is yes. I think it makes sense for us to diversify into other kind of almost like the crypto risk-free rate type of products, and that includes Maker as well. I mean, I think the reason we chose Aave was like we thought it was like we think it's for two reasons. One is like Aave is extremely battle tested, and especially the cycle they've grown to become like a really large DeFi protocol, and I think and we think that it's like a really it's almost like the risk-free rate. It's like the high version on the high end of like the risk-free rate for crypto, right? Like over the last few months has averaged kind of 10% or even a little bit above that. And it's just like I think risk-wise, people are very comfortable with Aave, and we don't want to. I mean, Sky is also I think very accepted in crypto, which is why we're interested in diversifying into it. I think Aave is almost kind of like that household name if you want to just earn like some sort of base yield on your stable coins at it's like relatively high, but then also considered extremely safe.
Mm-hmm. Got it. Yeah, and then we're talking about the other stablecoins that you're partnered with. So your partnership, this includes like Usual, Elixir, Diad, Angle. So mostly somewhat either decentralized or new models of the stablecoins. How do you see the future of decentralized stablecoins versus centralized ones like USDT, USDC that are currently used for minting Level USD? Is there any even possible chance for any decentralized stablecoin to reach the magnitude of the current Tether and Circle's stablecoins?
Yeah, I mean, I think the chance is there, and I think that's what obviously stable like Tether and Circle are amazing businesses, and they generate most of this treasury yield or like just more generally revenue that they keep for themselves. And so I think there is definitely like a chance for a stable coin to disrupt them, given that there are these additional benefits of being able to earn yield using them. That being said, I do think it's extremely difficult. It's not going to be like an easy road, and I think there is also like a very good chance that Tether and Circle, and especially Tether, has effectively won. And the reason for that is because if you're using stablecoins as a form of money, which is like I think the ultimate goal of every stablecoin, there's like extremely strong network effects for like the leader, which is Tether. And so you have like probably at least at this point probably like tens of millions or like even like hundreds of millions of people especially in the emerging markets that are using USDT for like as actual money, right? Like it's literally replaced local currency for so many people. And I think to get them to adopt a different asset, which is much less trusted, that the people that they're interacting with aren't using, is extremely difficult. And so I think the approach that a lot of newer stable coins, including ourselves, are taking is you sort of start with like more DeFi native folks. You start with like the more like yield generating use case, and the idea is to get to a scale where you can potentially kind of penetrate like the quote unquote real world use cases and start challenging stable coins like Tether and Circle. Yeah, basically, I think like that's a goal. I think of almost every new stablecoin, and I think there is a chance that one of us might be able to disrupt Tether or Circle, but it's not going to be an easy road to get there.
Yeah, that was one of my questions actually. You go on.
No, that's a take that makes a lot of sense, I think, with people even who understand crypto to no degree, which is cool. With that, where do you see the end game for stablecoins in general? Is the end game just the proliferation of what you just said? So everybody on the street has replaced money with stablecoins and is interacting directly with it as direct money?
I think so. I actually do, and I actually before I get into that, I think there's a caveat that there's probably like multiple. I mean, there are multiple different use cases for stable coins, and even in the real world, right? There's different use cases for money, and so yeah, I think the ultimate goal is for it to be used to replace like yeah, potentially to replace like credit cards and like the credit card networks that well, credit card networks as well as just like existing payment rails, because I do think there is like a lot more efficiency in using like blockchain for transmitting money, which I think, if anything, is probably like the ultimate goal of crypto in general, right? That's kind of what I think the narrative shifted a bit, but for a long time people were like, Bitcoin or ETH is going to replace like currency. But I think what's changed is like, Bitcoin's become more of like the store of value, like digital gold. And then I think the other issue that's like just very real, I think people are coming to terms with, is like you can't really use money that's volatile. But that's also where stablecoins come in, right? It's like a non-volatile token that is on the blockchain and has all the efficiencies of like the blockchain rails, but then actually is potentially suitable for money. So I think that is probably like the end game for like, well, that's the ultimate goal, is to sort of have this become at least like a major kind of like payment rail in real life. And then the other use case is what I was saying. It's like, when you go to a bank, you sort of think of banks as a place to store your money, but it's also a place to basically, earn income, right? And so that's kind of like your savings type of products, which is essentially what we consider equivalent to like yield generating stable coins in crypto.
Yeah, that's an interesting thing with the businesses and people adopting USDT, because that's what I was getting over last, I would say, 1-2 years, especially, well, considering that I have a lot of friends and family in still in Ukraine. The banking system kind of, well, it's not it's a bit different to what is in the non-war situation. So there's a lot of limits right now, so they have to go and use USDT. So there's a lot of people that start using it that don't participate in the industry any whatsoever. Like, they don't buy assets and nothing. They just use USDT. They have booths for converting dollars to USDT on the street. Essentially, it's almost like 0% commission. And now that's like that normal people started to accept that. I was curious whether it will actually go on into the businesses, because there are a lot of issues with the cross countries transaction. Is that banks sometimes actually freeze or just have a few days of not doing anything with your actual transaction. So curious whether actual businesses will start adopting not using Wise or banks or Revolut or any other fintech institution, but rather using actual stable coins for their transactions. But I would also see some downsides in that, is that a lot of such transactions are made by by someone in accounting or someone else. And then with banking, there's opportunity to say, okay, sorry, we've made a wrong transaction. Please charge it back. Here's the proof. If you made a mistake in address, then it's gone forever. And usually you pay for something like goods that would cost you $50,000, and employee couldn't ever fathom doing such a mistake with stable coins.
Yeah. Yeah, I mean, I think we're actually already seeing some cross-border business transactions using stablecoins, and I think I've heard of quite a few startups that are trying to really like enter that space and be the sort of end-to-end solution for that. So, I mean, yeah, I mean, the reality is like cross-border payments is like an extremely good use case for crypto, and like even at a person, and I think I'm sure, I'm assuming we've probably all sent money internationally or like cross-border using like stablecoins, and it's literally like a 10x experience compared to banks, right?
Literally.
You pay
Yeah.
some address and it just happens. Whereas like, like Saltee said, um, yeah, it's like using a bank is like this many steps. It takes days. It's just extremely complicated. So I think that's just as true for businesses. And a lot of them, they basically like stablecoins allow for essentially instant payments, whereas I think a lot of the times capital gets held up when you're using traditional institutions. But that being said, it is also true that there's advantages to using intermediaries because transactions can be reversed. I think what potentially might happen is just like it's kind of like probably some sort of like a intermediate model where like you actually probably do end up using an intermediary, but they use like blockchain rails. And so I think there probably hopefully will be a way to like reverse transactions when needed, but then still have the efficiency of like crypto and blockchain for the payments. I think the other important part is everything, at least if you just send crypto, it's just public on the blockchain, right? And so I think a lot of businesses probably don't want people to be able to see all of their transactions. So I think privacy is probably the other consideration here, but I think we're starting to see more and more solutions for that as well.
Yeah, I will definitely need to talk with Aztec about privacy. Maybe one of the next episodes. But that's true. Yeah, that might be an issue for the businesses that don't want, especially the competitors, to see what's going on, like how they're moving. But just for the reference that you've mentioned, right? The time that it takes. I just recently had a transaction from Bitfinex to my bank account. It's like on my company essentially, and it took, I think, 12 days to do everything to arrive the USD from Bitfinex to my European USD account. And it took like multiple emails because they had to ask me for a different bank because they couldn't work with them like with the normal one. They had to ask like for a different correspondent bank, I guess. I'm not sure what's the deal with that, but yeah. So another question that I had is considering that you've explained how layered the Level USD, that you have the USDC or USDT2 mint, then you have Aave, then you have the restaking, and then in the future there might be something else. Is it theoretically a possibility to have an unpeg? And if yes, then how you mitigate it?
Yeah, I think with almost every stablecoin model, like there is like depeg risk, right? And I think that's a reality. It's more about like how well, one is I think how we basically communicate the risks to users. I think that's always very important. I think actually the latest example is usual with like communication in general, and then the other is like what we do if that actually happens. Basically, with the depeg, there's sort of two situations. One is when there's actually under collateralization of the, assuming like we're talking about fully collateralized stablecoin models, is like if a stablecoin reserves actually becomes under collateralized for whatever reason, that basically means that it actually is like depeg, right? And then there's kind of just like market reaction. So sometimes this, even if a fully backed stablecoin can have very strong selling pressure, and that causes a depeg, but that's generally quite temporary in this, arbitrage opportunities to basically bring that back to peg. In terms of becoming under collateralized, so yeah, I mean, I think just to talk about like USDC quickly, which is kind of why we got into the space, like it can happen even with like what's considered very safe models. And so in their case, it's because one of the institutions that they were holding the cash with went under. And so there was like this risk that you wouldn't get that money back, and then you've just lost a part of the reserves. The same thing applies essentially to any other sort of backing, right? In our case, it's like we're backing it with USDC and USDT on, and we're putting it into other protocols. And so if there is an issue with like Aave and like, you're not able to get your principal back, or same with restaking, whether it's like a mechanism issue or like a smart contract kind of hack. These are risks where like the protocol could become under collateralized and depeg. And so, yeah, that's also partly why, we've chosen kind of what we consider to be very battle tested protocols. But that being said, smart contract risk always exists. So that is kind of like a reality. And that's something I think that, we've tried to just like communicate, and we probably will do more of. Basically, this is kind of like more disclosures to users. And then more specific to like, I guess, what we are doing, there's kind of like for Aave, it's like liquidation risk. And then for the restaking protocols, it's slashing risk, which slashing hasn't really been turned on. But, once that does happen, that is a possibility that the assets will get slashed, which causes a under collateralization on our part. Basically, yes. So I've talked about kind of mitigating the risk just by first choosing like protocols that are considered less risky, and then the second for us, it's probably just it's basically like we will use some of the yield to build up like an insurance fund. And so in the case where there are minor under collateralization, there is kind of like these additional there's like additional funds, which I guess effectively means that the protocol is over collateralized, and there's kind of like a buffer for some of the reserves to potentially be lost. So yeah, that's kind of like how we think about the risk of under collateralization and like depegging from that.
There was a project, Nexus Mutual, back, well, I think it's still probably around, but it was
I remember them back in the day. Yeah, it's
yeah, that
like
was
2020
insurance.
DeFi run.
Yeah, it was one of the early insurance-based projects. Is there something like that that either emerges or someone working on that is actually made for the protocol? So essentially kind of a B2B, like, hey, you pay us this amount from Treasury, we help to protect your users from unpeg or hack or anything like that.
Yeah, I think, or to be honest, I think we're still early, so we haven't like explored these options fully yet. But I do think that this is like a very valuable product for stablecoins. Obviously, like every stablecoins, the biggest goal is to like be stable, right? And so I think any sort of service that, including these insurance products that kind of help to mitigate that, is definitely very valuable. And so I do think, to be honest, like I said, I actually haven't. I'm not aware of like specific names, but I do think that I'm sure there are like kind of projects building these types of insurance products for stablecoins.
I have another question about risk, and I think some of the like initial feedback that people thought from about Eigenlayer and Symbiotic about scalability and the risks of restaking. Probably you've faced similar questions along the way. Um, I think the big question is: do you think we're heading toward a restaking arms race of sorts, where every protocol is stacking yield? And do you think that's that bad of a thing? If we are.
Are you talking about like AVSs or like just the people who are, or are you talking about the people who are supplying the assets for restaking?
I'm talking about people who are supplying the assets for
Okay.
restaking. Yeah.
Yeah. Yeah. I
But
think
either one.
Right, right. I think probably there probably is. I mean, there is a risk, right, with restake. The whole idea of restaking is this additional layer on top of like existing staked assets, or in our case, like the equivalent is assets that are generating yield elsewhere. And I think there's also a risk if you start taking like LRTs and then restaking those, because then it becomes extremely circular. But I do think like, and so yeah, this essentially is just like a risk kind of assessment exercise. I think what we're trying to do is essentially limit it to one layer of restaking, and we're not going to be like, we're not at least for now. I mean, I guess it's permissionless, but we wouldn't encourage people to be restaking Level USD itself, which kind of creates that almost like loop that I was talking about, where you're restaking restaked assets, and then I guess like in
Yeah.
theory you can like keep restaking that,
Like an
because
abracadabra, right? In the magic money.
right, right. So yeah, and then obviously the risk there is like if one if some of that gets slashed, you've essentially created leverage where like a much larger portion of the assets also would effectively become useless for collateral, because what's the thing that's backing those assets has essentially disappeared or being slashed, right? And so I think it's really about like yeah, it's like once again, I think it's like recognizing that there is like this additional risk from layering from restaking, but then it's like I think being smart about like how many times you do that, which I think we want to, at least for us, we want to minimize that to essentially just like restake once, right? So yeah, that's kind of like how, I think how we see the risk of like restaking with Eigenlayer and Symbiotic and all of these other protocols.
Got it. And then I have this question that is probably going to go for some startup teams and founders in our audience. It might be interesting for them. Is that could you tell us how the funding round was done, how to attract quality VCs? Because to be honest, on that call is only 0y is not backed by Robot Ventures. Both Tally and Level is actually Robot Ventures in Robot Ventures portfolio. And well, a couple other quality VCs is on your webpage. So yeah, how was it done? Any tips and suggestions? Just anything.
Yeah, we can I can give you like a high level of how we did it, but the caveat here is like every project raises in like a very different way, right? And then also I think the big a very big variable is like the market timing of raises, and it's like totally different when you're doing it in like a bull market versus a bear market. And then I think we were somewhat unique because, like I mentioned, we actually raised from like a for like a different idea, essentially in the last cycle. And so for the first raise, that was first of all, it was in like a peak bull market environment where I think VCs, they were almost like they were just a lot looser, I think, with deploying capital. And then play to earn at that point was an extremely hot narrative. And so these two factors, I think, made it just a little bit easier for us to raise. I mean, basically what we did was, I'm assuming most teams do something similar. It's like we just started with like our network of VCs, kind of reached out to them, pitched them, got them to introduce us to other VCs. And then you sort of like start this like a snowball of just like, even if every VC introduces you to one or two other VCs, like you end up talking to dozens of VCs very quickly. And then also like once you do get like a term sheet from even like one of them, you're able to take that to other funds, and then the process becomes easier. But that's basically like our original raise, like I said, from the last cycle. We actually did do a recent round, which we haven't announced yet. So that was a strategic round. And a lot of it was because, we pivoted and it's like a different idea, and we wanted to have kind of like some new investors come in. We were once again, given that we had raised before, we were lucky that we could go back to our existing investors, Dragonfly and Polychain, and both of them have decided, both of them chose to participate in this round as well. And then from there, it was like kind of similar story where, we just reached out to other investors. In this case, we actually have a lot of angels on our cap table for this round. And then for them, like you also have investors who are more like followers, and this includes angels as well as some funds. And so given that we did have Dragonfly especially come back in with like a sizable check, it just made like the follow on a little bit easier. So that's basically like our journey for raising.
Yeah, got it. And then the same kind of or similar question on the growth in general. So when we were just started to talk with you, it was a couple million in the TVL. I think it was like 1 and 6 or 2 million. And now, as have opened your webpage, it says 40 million in TVL, which is pretty good growth. So any insights on what was the most effective or what would help like projects, well, hopefully not your competitors, to grow that TVL?
Yeah. I mean, in our case, so the 40 million is the total protocol TVL. So that includes Level USD, which is backed by USDC and USDT. And so that's approaching 20 million. And then the other approximately 20 million is from the stablecoin partnerships that we were talking about before. So actually, I can go into that a little bit more. So yeah, I mean, for the longest time, actually, the majority of the TVL is from these stablecoin partners and not from Level USD. And we've been growing Level USD actually a lot more over the last month. But yeah, basically the idea here was we wanted to, and I mean, for us, there was actually a legitimate kind of use case for this as well. But the way, and I can go into like the way we work with these stablecoin partners, basically like in the long run, I think once again, this is like a risk assessment. And so, which like I think we're actually starting to think about much more deeply. But basically, it's like there is the possibility of using other stablecoins as collateral for Level USD if we think that they are suitable assets for that. And so to get that started, we basically partnered with these stablecoins and then allowed their users to deposit into our basically into our vault. And basically rewarded them with Level XP, which is our points program. But those assets aren't currently at least doing too much. I think the potential next steps here is to convert these into assets that can be restaked, and then, like I said, eventually potentially have some of them be used as collateral for Level USD. But for now, it's essentially like a points farm, and so it's like we've partnered with these stable coins. I think we were able to. I mean, it actually wasn't our direct intention, but I think we basically initially it wasn't our direct intention. But I think by partnering with them, we got some of the attention from their communities, and that was I think how we were able to get more stablecoin users to actually hear about Level as well in like a very collaborative way with other stablecoins. And so that's like how we actually grew like the majority of our TVL for quite a few months after we initially started talking. And then more recently, with like the launch of Level USD and the generating yield from Aave, I think a lot of the reason there's actually two kind of like reasons I think for our growth. One is just because of the high APY number for stake Level USD. So, like people are always looking for APYs, and when they see a high number, it gets people's attention. And then in our case, I think we're not doing anything like too crazy, right? Like it's actually very simple how we generate yield with, it's like, you know, once again, it's basically just from Aave. And then the other is like we're also basically talking to some like LPs to help bootstrap the TVL with some like private incentives. So this is something pretty much every stablecoin also does, and the idea here is like you are able to grow your TVL initially through like some funds that are able to kind of deploy a lot of capital, and then that helps to build trust in the protocol, and then from there, hopefully, like the growth is much more organic from retail. But for us, like we do have some funds that have deployed already, but the majority of our TVL is actually from our public program. So I think even at these early stages, we've actually been very organic. I think probably yeah, I think of the 20 million, only about 5 million is from like large institutions that we have like a, quote unquote, like deal with. And the rest of the 15 million is actually like just purely participants in our public program, which includes retail as well as some funds. But even for these funds, they're like participating like as like the public as opposed to kind of, kind of this private deal that I was talking about.
What do you see the future of the split between retail and institutional users of Level being? I previously worked at IndexCoop back in 2020, also when the very first ETFs of crypto were getting big, and it was really difficult to walk the line between retail and institutional, still like inciting the level of security and professionalism of institutional, but offering the especially like UX for retail.
Mhm.
How are you guys balancing that now? And then how do you see the future of what Level will look like?
Yeah, I think hard to know what it will look like, but and there's also two metrics here. One is like the actual TVL that comes from both, and the other is the number of users. So institutions, I think basically, like they basically just have a lot of money, right? Like if one institution is, holding $10 million of Level USD, that's equivalent to like thousands of individual users. Like if you're talking about your average user being, maybe like a few thousand. So yeah, I think it'll probably be like a mix. I think we actually do want to maximize the number of users as well. That's a very important metric for us, and that kind of shows like how widely used Level USD is, right? But at the same time, I think realistically, like institutions might make up a good amount of the TVL, even if there's like very few of them, just because they have just way more money. So I think ultimately it's like we sort of will sort of just like let the market kind of like use Level, right? And especially once we stop like the bootstrapping program, it's kind of like we still want, we will expect to have both institutions as well as retail users, and then it's kind of like that mix will just it's sort of just like we'll see what that looks like in the long run.
Yeah, thank you. And the next question is kind of two in one. That what would be the most optimal strategy to provide you liquidity in Level, and then maybe share some personal alpha if you have any on like general stablecoin farming.
Yeah, yeah. I mean, it's hard to say what's the best strategy, because I think for every user they also have different priorities. So I can go over kind of like the options and like the pros and cons of them. I think broadly speaking, there's sort of like two things. There's like two categories of rewards that you can get from Level. One is like the XP program. So if you want to maximize the amount of XP that you're earning, and then there's kind of like earning real yield. And so the way that we've structured our rewards is like you can basically choose between one or the other. And so we're sort of segregating our users indirectly. And so once you mint Level USD using USDC and USDT, you can either stake it to get S Level USD, and that's the 46-20-26 mechanism that allows you to earn yield. And we pass back the Aave yield to users. And so last week, I think what you see on our website right now is that as of January 9th, the trailing 1 week APY was 60%. And the week before that was actually even higher. It was like 100%. And the reason for that is because not that many people staked, which means that we had more yield to give to less users. We're already seeing that number go up because, it's almost like a natural sort of balance, right? So I think last week we probably had like 15% of Level USD staked, and I think we're at like 35% now. And I think once again, a lot of that is because the high number attracted the users, and more people wanted that real yield. So that's one option, which over time I think will come down a bit. But then this kind of leads to the reason why a lot of people haven't staked, which is because they're trying to earn level XP. And there's a few options here. One is you can just deposit the level USD that you're holding into our essentially our XP farm, and so that's 10x XP, quite attractive. And then the other option is you can provide level USD or and USDC liquidity into our curve pool. And then you would deposit the LP tokens into our farm, and you get 20x XP there. That does sound like it's double the XP of level USD, but I think it's probably actually a similar amount, because at the end of the day, if you provide liquidity, you need to supply level USD and USDC, right? And if you assume half and half, it actually ends up being approximately a similar amount of XP from pure capital efficiency perspective. And then the last option, which is actually something that we haven't actively announced yet, but we are live on, is that level USD can be used as collateral on Morpho now. And so you can supply level USD as collateral to borrow USDC. We're giving 7x XP for that. And then, with the USDC, you can do whatever you want with it, but, we want to encourage users to kind of bring that back to the Level ecosystem. And so if you mint level USD using that, you can do any of the options I just described. So that includes, depositing it to earn the 10x, or you can even keep borrowing on Morpho, or you can stake it to earn the yield. So these are just basically, once again, it's kind of just different ways to earn or farm on Level. Hard for me to really say, and also for regulatory reasons, I can't really recommend, I guess, what's the best option. To be honest, there is no real best option either. It's kind of what do users want the most. It's a few different options to farm XP, and then there's kind of the option to stake to earn the Aave yield that the protocol is earning.
Cool. What about what are the next plans for Level? We hit on a few things that we sort of touched on, with expanded partnerships, potentially expanded stablecoins that you use as collateral for Level USD. What else? What's on the near-term roadmap and long-term?
Yeah, so I think first thing is actually is actually starting to restake the A tokens. Like I said, we've been testing that out, but we actually haven't actively started doing that. But that will kind of unlock the restaking rewards for users. So that's probably the one of the things that's going to be happening. Well, actually, there's a few things happening this month, in the next month. So that'll be probably one of them. The other is more integrations. And so, like I mentioned, we actually just integrated with Morpho towards the end of last week. We also have Spectra coming up. So for people who are not familiar, that's essentially a Pendle competitor that's kind of, I think, done extremely well. And then, so that this is essentially allowing for rewards trading. And then we're also talking to Pendle about, basically integrating with them and creating YTs, PTs. So basically these integrations allow for more use cases for Level USD as well as stake Level USD. And then the other thing that we're working on this month is going multi-chain. So we're integrating with Layer 0. Once that's done, Level USD can be basically very easily, essentially bridged to other chains, and then we can create more use cases there. So these are all near term. And then, and then from just a growth perspective, it's as a stable coin, a lot of the value comes from being large and being used. And so that's where, the focus will be on growing TVL as well. So that we can have more users, have more use cases, and then build up that network effect as a stable coin. So that's more short to medium term. I think long term, our vision here, I think, is essentially to, if in some ways you can think about Level USD as a stable coin that's packaged DeFi native yields. And we've really seen DeFi grow, like I mentioned. I think especially Aave, DeFi, sustainable DeFi yields has become much more scalable, and we think that will continue. I think this is another 100x, 1000x kind of market. And so Level USD becomes this asset that allows people to access these DeFi yields very easily. And one extremely interesting market is actually TradFi. I think we're seeing more interest from TradFi into kind of crypto and I think especially with fixed income type of products, because that's actually the biggest asset class in TradFi anyway. And so, yeah, I think what will be interesting is when TradFi is interested in earning like DeFi yields, and then Level can be this like product that we can offer to them. And I think the other reason we're very excited about this is like almost every other product is sort of like bringing TradFi yields on chain, like essentially with tokenizing treasuries. That's how like people are sort of seeing the merge between TradFi and DeFi. Whereas
I
we
was
actually,
talking about this with my
yeah,
friend the other day. That is the vast majority of that landscape is
right,
really interesting
right.
skewed.
Yeah, whereas like, and we do kind of see this world where the two kind of markets almost like converge, and DeFi just becomes part of the financial market. But we're sort of approaching this from like the opposite direction, where we're actually taking DeFi yields and potentially being able to bring this to TradFi, and then like kind of like helping to almost accelerate that convergence of like the two markets. So yeah, that's kind of like the longer term vision that we're really excited about, and obviously that huge market opportunity, just because fixed income is literally like trillions of dollars. So I think the demand side is almost like it's almost certainly there. There's definitely compliance things to figure out. That's also very important. And then I think the opportunity is like on the supply side is just like the growth of DeFi, becoming more sustainable and having like these very scalable sources of yield.
Yeah, the US treasuries are actually going down recently, right? So I think the top point was 5.5 or 5.7% or something like that for the US T bills, and right now it's like at 4.3% or something like that. So it just
Right.
goes down together
Right.
with the Fed rate. So maybe
Yeah.
the juicy DeFi yields will be pretty interesting for them. But I
Yeah.
wanted just to quickly go back to the question before. So right now you have the 60% APR, and that is only without it, right? This is without the restaking yield yet. So it might
Yeah.
even grow a bit further. So
Yeah, so just I wanted a few things also, for regulatory purposes. This 60% APY, or like any APY number that we show on our website, is like a historical number. And so, yeah, basically it's like we report the trailing 1 week based on like the date of our weekly distribution.
Mhm.
And so this number will change over time. And just because we were able to give 60% last week doesn't mean that we will be able to give 60% kind of like this week or in the future. And so this number is changing all the time, and it just depends. And there's two major variables. One is like how much yield we generate as a protocol, and that we pass back to the user, and the other is how much Level USD is staked. Because the more that's staked, then like the pool of rewards that's used for distribution decreases because it's spread out across more people, right? But yeah, like to answer your question, the current APY is just generated from Aave. When we add the restaking component, that will add additional rewards on top. I mean, how much that will be is hard for us to predict. And then the other consideration with restaking is that the rewards usually come in the form of like either the restaking protocol's points, which might translate to tokens in the future, or it's from like AVS yield, which often is paid in the form of the AVS's token as well. So these are volatile assets. We're still kind of like deciding on how we're going to pass this back to users. One is like we can actually just pass the tokens back directly, or it's like we can sell off these tokens and then pass it back in like Level USD or like in dollar terms. The second option has this disadvantage of like, at the end of the day, we are generating yield from our partners, and if we're selling their tokens, that creates like a selling pressure.
It's a sell pressure for them. It's not
Right.
super optimal.
And so that's something that we want to take into consideration as well. Like, we don't want to, we sort of don't want to be like hurting this one of our sources of yield, right? But yeah, the idea here is that this is additional rewards, but like the exact amount or the form is still kind of to be decided how we're going to pass that back.
Got it. Yeah, and then I think that was the majority of questions regarding, well, specifically Level. Now the next one is like, what is your most controversial opinion on crypto? Kind of a hot take or something.
Oh, putting me on the spot there. Let me think. What's my most controversial opinion? Well, I mean, I don't even know if this is controversial, but I think, given that we're building the stablecoin space, we are like stablecoin maxis. We do think that,
Hmm.
and I think people, a lot of people probably do agree with this now, where like, stablecoins are like one of the major use cases, but I think we believe that even more so, I think than average. And so, I mean, I think I'm not going to question like, the relevance of like, let's say Bitcoin as a store of value. But I think outside of that, we do think stablecoins is kind of like the future of crypto, and like even in DeFi, it's going to be like very stablecoin focused, like yield and like opportunities. And so, yeah, we just think like essentially DeFi could end up being like 90% stablecoins. Yeah,
I
Yes,
think
it's a
the
good thing.
stablecoin narrative has shifted significantly in the last few years, even more so than it already was. Not like anyone was ever against stablecoins, but I think the importance of them to the overall DeFi ecosystem has massively changed, at least in the last 2 years. Since the
right.
last big cycle. Yeah,
I mean, one issue with that, I think previously is like, yeah, stablecoins are great, but then it's like the reliance is very heavily on USDC and USDT, which are centralized
totally.
entities. And that's something also something that I think that's also something that we're trying to change is like we're trying to build the stable coin, even though I guess we are still I guess we're indirectly dependent too, right, because we're backed by USDC and USDT, but like kind of we're encouraging, I mean, our protocol can be built in a way that is like fully decentralized, that doesn't require centralized entity, because all of our kind of yield generation does happen on chain. And so that's something that also like I guess it's more philosophical, and to some extent I think people have started to care a little less about decentralization, but I think we want to maintain
Mm.
that more if possible.
Yeah, I agree that people, I work in the governance space now, and I think people have cared less and less about decentralization over time, especially as it stands with the ethos of crypto.
Hmm.
People that have been here since 2012.
Right.
Um, yeah, definitely.
Imagine with what you've mentioned regarding being stablecoins maxi. Do you ever get this message from someone from family like, "Hey, I saw Bitcoin goes up, so it means good for you, right?" It's like, yeah, yeah, but I'm stablecoins.
Yeah, yeah, exactly.
Okay, so what is your favorite project or projects outside of Level? Like just any team building something interesting or in interesting assets that's either goes
Yeah.
up or it goes down perpetually. Just
Yeah, good
anything.
question. Just to caveat also, like I think, I mean, I don't think this is true of all founders, but like when you're like a founder building in crypto, a lot of the times your focus is just like on your project, and you actually don't have time sometimes to explore like other projects as much. And I think I sort of fall into that camp. I mean, that being said, doesn't mean obviously like I still keep tabs on like a bunch of other stuff. I think within crypto, I think in the stablecoin space, well, one like protocol I think that's been doing really well recently is like Resolve. They're essentially like an Athena competitor, but they have like this very interesting kind of almost like tranched mechanism, and also like I think they're generating a much more significant amount of their yield like purely on chain. So I think they're very doing a lot of activity on like hyperliquid as opposed to like only on centralized exchanges. So that's like, and we also partner with them. So I think they're like, definitely super interesting. Although I think I wouldn't say it's like like a lot of people have heard about them already. So it's not like super kind of like alpha, I guess. But I do think that they're quite interesting. And then I think, yeah, also kind of given related to our space is like, I think Symbiotic is also has just like a very, they were almost like the ones that kind of pioneered like the permissionless token, like restaking of any tokens, in which Eigenlayer actually, if anything, they were the last ones to adopt that out of the major restaking protocols. And so I think Symbiotics, like, it's been delayed a bit, but I think they are going to launch their mainnet very soon. And so I think it'll be interesting to just see kind of like these, I guess aside from ETH and also stablecoins in our case, it's like the growth of like non-ETH assets for restaking as well.
Yeah, got it. Definitely Resolve moving pretty interesting because they've had like a rapid growth from 20 million to
Yeah.
200 or just something like that over like 2 weeks that I saw.
Yeah, I think in the last month they've grown. I think they actually might have crossed like 400 or 500 million in TVL now.
Yeah.
Yeah, that was insane actually.
Yeah,
This
and
was
all of
pretty
the
good.
growth has
Good for
happened
them.
like I think since like Thanksgiving, basically, like end of November, like
Yeah.
start of December.
Got it. Yeah. So that was pretty good. That was pretty insightful. Thank you so much. As another person, well, not being a stablecoin maxi, but I'm definitely getting this message. Hey, I saw Bitcoin goes up. Means good for you, right? It's like I'm a little bit underexposed, but I have my stablecoins. Don't worry. I definitely had some fun talking to you. So I wanted to ask you whether is there any closing thoughts or just anything about Level that we didn't ask you, but I still wanted to deliver to the audience.
No, I think we covered pretty comprehensive, covered most things. I mean, last thoughts is just like basically, I guess like a plug to get people to at least check out Level. Not gonna like be like use Level and you'll get rich or anything like that. But it's like at least like we're still in the early stages. We want to see more users at least interact and like and give and then very importantly I think is to give us feedback. Whether it's positive or negative, and we want to build kind of what users want, and so yeah, basically just like, Level.money is our domain. You can check out the app if you're a non-US user. And then, yeah, whether you're minting Level USD or like, depositing assets, yeah, just play around with it and let us know if there's any feedback that you have.
Yeah, even me myself, I was like in Level for 2 months already or 3 months. After our conversation, I thought like, hey, should I be continue farming XP or should I opt in for the 60% APR version? I have to think about it myself after
Asking
the
questions for your
conversation.
personal gain.
Yeah. Yeah, and I
Yes,
mean, you can also
exactly.
just split your portfolio, right? Diversifying is also an option there. You can do something.
Yeah, but
You can do
split it into definitely.
Yeah. And then the other thing is like, since we started talking, we've like, we've released Level USD, we've released Stake Level USD, like, Morpho most recently. So we're continuing to build more features and products and more integrations. And so, that's also a reason just to come back and kind of see what's new and what else you can do with Level.
Yeah, got it. Thank you so much. So that was Kedian from Level, CoolHorseGirl from Tally. Go check out their governance as usual, and hosted and created by 0y. Thank you, everyone. That was second episode. Hopefully, see you on the next one. Cheers, guys. So, answer, we
Thanks
can
so much.
turn off the records.
Bye, guys.
That's it. And well, again, yeah. Thank you so much for coming in, doing
It's good
that.
to
I
meet you,
know that.
Kedian. Levels
Oh
so
yeah, I
cool.
definitely should connect you, by the way, on Level and Tally, like the
Yeah.
possible future governance and everything. I'll create a
Yeah.
chat
We're
for you.
doing we usually do governance, but we're doing recently restaking for governance tokens to
Okay.
finally add utility. So it's cool to see someone outside of the ETH space building in restaking.
Yeah. Yeah. Awesome. Yeah. Let's definitely chat about that. And, thanks for having us. Yeah. Great to connect.